The euro extended gains on Tuesday despite weak economic sentiment data from Germany and the euro area. Germany's headline ZEW Economic Sentiment Index improved slightly but remained below consensus estimates. The leading indicator of economic health in the eurozone was revised higher to June, limiting the euro's downside potential. Later in the day, the US released retail sales statistics that were worse than expected. US retail sales barely rose in May, which helped the euro and the British pound gain value as a part of bullish correction. The riskier assets hit a new one-week high, signaling the potential for a continued bullish run. With today's macroeconomic calendar devoid of any major news releases from the eurozone, bulls will likely continue to push the euro higher. As for the British pound, its direction will depend on UK consumer prices. CPI inflation is expected to hit 0.4% in May. On an annual basis, economists expect UK inflation to slow to 2% in May, down from 2.3% in April. In this case, the Bank of England is likely to announce plans to cut interest rates as early as this fall at tomorrow's meeting. If consumer prices rise, especially core ones, Bank of England Governor Andrew Bailey will probably refrain from dovish comments, which could trigger a surge in the volume of long positions pound. In addition, traders may take notice of the US housing market index. Now let's move on to technical analysis. The 1-hour EUR USD chart shows that it's worth focusing on the levels of 1.0711 and 1.0760. A rally followed by a false breakout at 1.0760 will generate a sell signal, dragging the euro down to 0711. A false breakout at 1.0711 will make it possible to buy the pair in anticipation of intraday correction of 15-20 pips. If the price falls below 0711, it would be wise to go long on a rebound at 1.0672 mark. However, even though the downtrend remains intact, such a steep decline is unlikely today. Alternatively, if the price rises above 1.0760, short positions can be considered at 1.0790 on a false breakout or at 1.0816 on a rebound to catch an intraday correction of 20-30 pips. Speaking of the British pound, a false breakout at 1.2719 will generate a sell signal. If data signals that price pressures are easing, sterling may dive to 1.2686. If the price breaks below this level and tested from the bottom up, the pound-dollar pair is expected to plunge to 26.57 and even 26.31. At the level of 1.2631, I recommend going long on a rebound, counting on a rise of 25-30 pips. Going long at 26.86 and 26.57 will only be relevant in the case of a false breakout. If UK inflation accelerates and the pound sterling climbs above 27.19 on expectation that the central bank will keep monetary policy tight at the upcoming meeting, it will be possible to go long, expecting a rally to 1.2750 and 27.78. At the level of 1.2778, traders are advised to go short on the rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2750 and 27.19 can be opened following a false breakout. Best of luck.